Get ready because the crypto world is absolutely buzzing today. We've got seismic shifts happening, market dynamics flipping on their head, and bold moves that are rewriting the playbook. If you thought things were moving fast before, buckle up. The pace is accelerating, and you're about to get the inside track on the stories that matter. We're diving deep into the data, breaking down the implications, and bringing you the crucial updates you need to know. Don't miss a second of this. You're about to hear what's making waves, what's shaking things up, and what it all means for the future. Let's get straight into it. First up, we're seeing a massive influx of big players into the crypto scene, completely reshaping the landscape on one of the biggest platforms out there. The average deposit size has exploded, signaling a major power shift. Are the whales back in control, and what does this mean for everyday traders when the big money starts moving? We've got the details. Then, get ready for a major corporate shakeup that's taking a traditional business and injecting it with a heavy dose of digital asset strategy. This isn't just a change of heart. It's a fundamental restructuring with massive implications for how companies operate and how you can get involved. We're talking about a bold pivot that could set a new standard. Next, we're tracking a significant corporate maneuver that involves a public company making a bold leap into the digital asset space, not just as a holder, but as an active participant. This move is designed to leverage crypto for growth and could be a game changer for how businesses interact with these new financial tools. What's driving this innovation, and what are the potential rewards and risks? And finally, we're looking at a landmark moment for Bitcoin itself, breaking through a critical price barrier. This isn't just a number. It's a signal, a potential catalyst for even greater adoption and a redefinition of long-term value. What's behind this surge, and what could it mean for the market moving forward? Stick around, because you won't want to miss any of these critical updates. Make sure you're subscribed and have that notification bell on so you never miss a beat. Well, watch, Binance sees surge in big player deposits. Binance is experiencing a significant shift in its user base, with on-chain data revealing a dramatic increase in the average deposit size. What was once a platform dominated by retail investors is now seeing a surge in activity from whales, large individual investors and institutions, with the average deposit size leaping from around 0.8 Bitcoin in early 2025 to a staggering 13.5 Bitcoin. This trend indicates a growing preference among major market players for exchanges offering deep liquidity and efficient execution of high-volume trades. The enhanced liquidity pools on Binance are a key attraction for these whales. Such environments are crucial for large-scale traders who need to execute substantial transactions with minimal price slippage, ensuring that their market entry and exit points are not drastically affected by the size of their trades. Binance's status as the largest exchange by trading volume naturally positions it as a prime destination for these sophisticated market participants who aim to influence and capitalize on market movements. This influx of capital from large investors suggests a maturing crypto market where institutional adoption is on the rise, leading to a more dynamic and potentially volatile environment for smaller retail traders. This surge in whale activity coincides with Bitcoin's critical test of its $110,000 support level. Analysts are closely watching how this increased presence of large traders on Binance might impact short-term price action. If Bitcoin successfully defends this crucial support, it could pave the way for further upward momentum. Conversely, a breakdown below this level could trigger more significant price drops, potentially testing the $100,000 mark. The strategic trading decisions of these whales could therefore play a pivotal role in determining Bitcoin's immediate price trajectory. Further evidence of this trend is seen in recent large-scale token deposits. For instance, 3 major wallet addresses collectively deposited 43.38 trillion CHEMS tokens, valued at approximately $4.99 million, onto Binance. This transaction exemplifies the scale at which whales are operating and highlights Binance's role as a central hub for such large-volume activities. It also points to a broader pattern of capital rotation within the crypto market, where significant funds are being moved between different assets and projects. The increasing dominance of whales on Binance reflects a broader market maturation. As regulatory clarity improves and institutional confidence grows, more large players are entering the cryptocurrency space. This structural shift is transforming exchange dynamics, with a greater emphasis on catering to institutional needs. For retail traders, this evolving landscape may mean increased market volatility and more pronounced price swings, as the actions of a few large players can have a disproportionate impact on market prices. Hold on tight, because the market is just getting started with these major shifts. Next, we're diving into a company that's making waves by merging with a Bitcoin miner, preparing for a Nasdaq debut. Miner merger mania. Gryphon Digital Mining joins forces with American Bitcoin for Nasdaq debut. In a significant move for the digital mining sector, Gryphon Digital Mining shareholders have officially approved a merger with American Bitcoin. This strategic stock-for-stock transaction will see the combined entity listed on the Nasdaq stock market under the ticker symbol ABTC. The deal, finalized after a shareholder vote on August 27, 2025, represents a pivotal moment for both companies, aiming to leverage combined strengths for growth in the public market. To comply with Nasdaq's minimum bid price requirements and ensure a smooth listing, Gryphon's board has also authorized a 5-for-1 reverse stock split. This corporate action, effective September 2, 2025, will reduce Gryphon's outstanding shares from approximately 82.8 million to about 16.6 million, excluding any shares issued as part of the merger transaction. This consolidation is a common practice to meet exchange listing standards and enhance the per-share market price. The company will transition to Class A common stock with a new CUSIP number, while its overall market capitalization is expected to remain consistent. Importantly, fractional shares resulting from the split will be automatically rounded up to the nearest whole share by brokers and custodians, simplifying the process for shareholders. American Bitcoin, previously known as American Data Center, has strategically rebranded itself as a pure-play Bitcoin mining company with a clear objective: to build a substantial Bitcoin treasury. The company currently holds an estimated 215 BTC, with some third-party data suggesting its holdings could be as high as 1,941 BTC. This merger provides American Bitcoin with a direct pathway to public market access, allowing it to bypass the often lengthy and complex initial public offering, IPO, process, and immediately benefit from Gryphon's existing Nasdaq listing for enhanced liquidity and investor reach. The merger aims to synergize Gryphon's established low-cost mining infrastructure with American Bitcoin's aggressive Bitcoin accumulation strategy. This integration is designed to foster a more scalable and appealing investment platform. The move aligns with a growing trend among publicly traded companies to increase their Bitcoin reserves, with aggregate holdings by public companies now exceeding 989,000 BTC, a significant portion of which is held by major players like MicroStrategy. This strategy underscores the increasing acceptance of Bitcoin as a corporate treasury asset. Company leadership, including Asher Genoot, CEO of Hut8, which holds an 80% stake in American Bitcoin, has highlighted the strategic advantages of merging with an established public entity over pursuing a new IPO. The combined company will operate under the American Bitcoin name and the ABTC ticker, enhancing brand recognition and market positioning. Furthermore, the company is actively exploring international expansion opportunities, with a particular focus on Asia, including Hong Kong and Japan, to broaden its global operational footprint. Following the merger announcement, Gryphon's stock experienced considerable volatility. The shares saw a notable 41% rally leading up to the news, but subsequently dropped over 10% on Friday, closing at $1.54. This fluctuation reflects the market's reaction to the transaction and the inherent speculative nature of such corporate deals, especially within the dynamic cryptocurrency sector. The impending Nasdaq debut is anticipated to provide American Bitcoin with greater access to capital and attract more institutional investor interest, bolstering its position in the competitive digital mining landscape. Stay with us as we explore another company making a bold pivot, embracing digital assets as its core strategy. Next up, a company is transforming itself into a crypto-backed hybrid, raising significant funds in digital assets. AirNet takes flight with digital assets. $90 crypto raise fuels hybrid model. AirNet Technology, a company previously focused on data centers, has announced a groundbreaking $90 million investment secured entirely in digital assets, comprising 819.07 Bitcoin and 19,928.91 Ethereum. This substantial capital injection, executed via a registered direct offering, marks a definitive strategic pivot for AirNet as it transitions to a crypto-backed hybrid business model. The company's CEO, Dan Shao, highlighted that this move is central to its long-term vision, with the digital asset capital earmarked for strategic investments and operational enhancements. The unique structure of this offering is particularly noteworthy. By accepting digital assets instead of traditional fiat currency, AirNet has fundamentally restructured its balance sheet and operational framework. This approach not only provides the company with immediate access to significant cryptocurrency holdings, but also aligns its business model directly with the digital asset ecosystem. Shareholders in this offering gain equity in a functioning business, while simultaneously receiving indirect exposure to a substantial portfolio of cryptocurrencies, creating a novel investment proposition. To spearhead this transformation, AirNet has bolstered its team by hiring cryptocurrency experts. These professionals are tasked with actively managing the company's digital assets, moving beyond a simple holding strategy to one that seeks to generate returns and optimize the portfolio. This active management approach positions AirNet akin to a publicly traded digital asset management fund, a model that is still relatively rare in the current market, especially given the regulatory complexities and inherent volatility associated with cryptocurrencies. The company acknowledges the inherent risks associated with managing digital assets, including price volatility, evolving regulatory landscapes across different jurisdictions, and potential accounting challenges. However, by integrating digital assets directly into its core strategy, AirNet aims to mitigate transitional risks and ensure immediate alignment with its new direction. This proactive stance is crucial for navigating the complexities of the digital asset space. In parallel, the broader digital asset market is witnessing increased institutional interest and significant regulatory developments. Notably, Eric Trump has expressed strong optimism about Bitcoin's future, projecting a potential $1 million price target. His comments, made during a conference in Hong Kong, also acknowledged China's significant role in the digital asset industry, even amidst its domestic regulatory restrictions. This sentiment reflects a growing global confidence in Bitcoin's potential, particularly as its volatility decreases and institutional demand rises. Hong Kong, specifically, is emerging as a key regulated hub for digital assets, actively developing innovative policies under Beijing's broader digital strategy. This regulatory progress is fostering a more mature and stable digital asset market, which is expected to further accelerate institutional adoption and potentially drive price appreciation. The decrease in Bitcoin's volatility, noted by J.P. Morgan analysts to have fallen from nearly 60% to 30%, is attributed to increased corporate treasury adoption and the successful launch of U.S.-listed spot Bitcoin ETFs. This trend positions Bitcoin as a more viable alternative to traditional assets, though it still faces challenges in achieving gold's safe haven status. But that's not all the major news we have today. There's a significant milestone for Bitcoin itself that you need to know about. Prepare for a look at Bitcoin breaking a critical price barrier, signaling a potential new era for institutional adoption. Bitcoin shatters $111,000 barrier, a new era for institutional adoption. Bitcoin has achieved a remarkable milestone, surging past the $111,000 mark in a significant breakout that analysts are heralding as a potential inflection point for institutional adoption and a reconfirmation of its long-term value proposition. This price action is not merely a technical achievement, but a strong indicator of growing market confidence and the increasing integration of Bitcoin into mainstream financial strategies. The breakout above $111,000 suggests a powerful bullish momentum, potentially driven by a confluence of factors, including sustained institutional inflows, positive macroeconomic indicators, and increasing regulatory clarity in key global markets. For years, Bitcoin has been navigating the path from a speculative asset to a recognized store of value and a potential medium of exchange. This latest price surge could accelerate that transition, attracting further capital from large financial institutions and corporate treasuries that have been observing the market closely. The implications for institutional adoption are profound. As Bitcoin demonstrates increased price stability and robust upward trends, it becomes a more attractive asset for diversification within institutional portfolios. The development of regulated investment vehicles, such as spot Bitcoin ETFs in the United States, has already lowered the barrier to entry for many institutional investors. A sustained move above critical resistance levels, like $111,000, could unlock further waves of investment, reinforcing Bitcoin's position in the global financial landscape. Furthermore, this breakout could redefine the narrative around Bitcoin's long-term value. While historically characterized by high volatility, recent trends suggest a maturing market. As institutional participation grows, the market may become less susceptible to the extreme price swings previously associated with retail-driven sentiment. This could lead to a more predictable and stable price appreciation trajectory, aligning Bitcoin's performance more closely with traditional asset classes while retaining its unique digital characteristics. The market's reaction to this significant price level will be closely monitored. Analysts are keen to see if the $111,000 level can hold as support, potentially paving the way for further upward movement towards new all-time highs. The interplay between on-chain metrics, macroeconomic factors, and the ongoing adoption curve will be crucial in determining the sustainability of this breakout and its impact on the broader cryptocurrency market. This event underscores Bitcoin's resilience and its growing significance as a digital asset class. And that wraps up our top stories for today. Don't forget to like, subscribe, hit that notification bell, comment below with your thoughts, and follow us on all our social channels. Quick recap. Whales are reshaping Binance, a miner is going public via merger. Another company is pivoting to a crypto-hybrid model with a massive digital asset raise, and Bitcoin has broken a critical $111,000 barrier. Smash that like button, subscribe for more, ring the notification bell so you don't miss out, drop a comment with your take, and follow us on all our social media channels.